talk about today? We've got to talk about the action in the gold and the silver price. They're falling today, by the way. You probably noticed that if you are a stacker who pays attention to the markets. Also, the price of Bitcoin taking off above 80K. Is it going to head to 100,000? What's going on with that? This is all part of the Trump Mania trade, I believe. So we're going to get into that. I want to talk about where the bottom may be in the gold and the silver market. And I suspect that we're getting close, by the way. But that's not just baseless speculation. I think that the fundamentals and the charts really support that. Take a look at some of that as we delve into today's live stream. But there's just so much to cover with live streams. Sometimes it's tough because I got all these things that I want to discuss with all of you, but it can be hard to kind of keep it all straight in my mind as we do this. There's no editing here, there's no going back. But I'm going to keep an eye on the chat today as well. So if you have any questions or comments, feel free to put them in the chat there. That also helps the algorithm. So, feel free to fire it up. I always appreciate that. Appreciate everybody out there who watches, comments, likes, participates, even if you thumbs down the video. Thanks for watching and participating. But let's delve into what's going on with silver today. I guess that's a good place to start, considering that this is the Smart Silver Stacker channel. So, should we all go out and sell our silver here and buy Bitcoin? I think that's the question on many people's minds. Seeing this stuff kind of languish as Bitcoin explodes, as the broader markets explode. But look, we live in an economy, in an age where the economy is not one in which there's really any price discovery mechanism. This is all largely speculative trading. There's a huge amount of cash sloshing around out there. This is nothing new, right? If you go back over the past several years, there's incredible ups and downs in these markets. We live in a bubble economy. So let's just talk about the silver price. So silver's down today a little over 2%. It's right around $30.50 right now, silver spot. And as I mentioned a moment ago, I think we are likely near the bottom. Now, I think the bottom could be a little below where we're at right now, probably around $30 or just under the $30 level. Now, why do I say that? Well, let's talk about the fundamentals real quick, and then we'll pull up the chart, and I'll take a look at that with you. So, following the election of Donald Trump, we're seeing the silver price and the gold price correct. They're selling off, whereas riskier assets like Bitcoin and stocks are taking off. What does that mean? Well, I think it's an initial kind of gut reaction among investors. They think that the Republicans and Trump are going to be good for the economy in some capacity, and therefore the safe haven assets of gold and silver may no longer be viewed as necessary. And also, these kind of, the stodgy old real money assets like gold and silver, they're getting sold off so that money, cash, can flow into those riskier assets where there may be better potential gains. And I think, honestly, this is a bit of an overreaction. While Trump may be in some marginal way better for the economy than the outgoing administration, I don't think it's going to be that much different, really. The same problems that we've been facing, exploding debts and deficits, those are going to continue to manifest themselves. Yeah, taxes might be lower, and that's great, but the size of government spending, I really don't think is going to be diminished much. I'm not expecting Elon Musk and Ron Paul to ride in here on a white horse and slash Social Security spending, slash Medicare spending. There's no way that's going to happen. There's no way any politician is going to put their name on that. There is some discretionary spending they might cut, but at the end of the day, the real big ticket items are not up for debate, right? They're going to continue to grow. In fact, many of them will expand. Think about Social Security. One of the things Trump is talking about, cutting taxes on Social Security payments. So that's basically like a de facto increase on Social Security spending. So these real problems are not going to be addressed. If you think that he's going to come in and slash the deficit down or balance the budget, this is a pipe dream. And if it happens, great. Sometimes you don't know what you don't know. I'm certainly no expert on anything economic. I'm just a guy on YouTube, but I don't know. I'll believe it when I see it. Some people even have been saying in the comments on recent videos that Trump is going to end the Federal Reserve. I mean, come on. You really think that's going to happen? Put a 2 in the chat if you think it's impossible that anyone who is allowed to become president in this system would touch the Federal Reserve as an institution. Again, I mean, I'd be thrilled if that was the case, but I'll believe it when I see it. I just don't think that's going to happen. But that being said, I'm not going to pontificate on this too much, except to say that the debts and deficits aren't going anywhere. Now, let's. Someone in the chat says you're not Donald Trump, bro. Yeah, that's true. I'm not. That's a good point. Thank you for stating the obvious. All right, so let's look at the silver price chart here. And I think this should give us an idea of perhaps where the bottom is and how we are getting close to the bottom. Now, why? I mean, sure, there's fancy colors on there. There's some things I've drawn on the chart. Well, let's take a look at how silver has behaved thus far this year. So we had this big run up starting around 22 bucks earlier this year at the beginning of the big silver price rally. Then it ran up to just over 32, right? So from peak to trough, that's where this colored chart, which is a Fibonacci retracement, is drawn. And all this really represents is how far the pullback goes, right? So this green level here represents a 50% pullback. This blue line represents a 61.8% pullback, which according to the golden mean is an important level. And if you look at that run up, what happened when we got the corrective phase was we had just a little over a 50% pullback in the silver price. Ran up to over 32 bucks, pulled back to around 26.50. And then it kicked off the next phase, the next run up, which took us to almost 35 bucks. Now, we hit that and then we began to correct, right? We're in the midst of a correction right now. How far have we pulled back? Well, we've pulled back to just over 50%, which, if you notice, is exactly what happened last time we got a correction. And then that kicked off the next bull run. Now, I think we could fall further from here. I think $30 would be a good price target. $30 being an important psychological level of support, and also that kind of coinciding with this 61.8% retracement, which again, the Fibonacci retracements and the golden mean and all that. I mean, maybe you think that's just like reading entrails or casting runes, whatever. I mean, it seems to work. So I suspect that, that's how far we're going to pull back. By the way, if you want to buy the dip in gold and silver, let's not forget today's video sponsors, SD Bullion. You can always head over there, take advantage of the dip, and pick up some gold and silver. What is the best thing to buy right now? Look, not financial advice, of course. I'm just kind of sharing with you what I think is how to play this pullback. Junk silver, still my number one pick for stacking. You can see I got some half dollars out here on the table. You can get a roll of $10 face junk silver, 90% US silver coins for $233 over at SD Bullion. I think that's a screaming deal considering what is ahead of us. And also, for gold, whoops, I just dropped something. The St. Gaudens Double Eagle coins that they have on sale right now, it's a little over 3% markup over spot for one of these slabbed graded pre-1933 gold coins. I think those are a huge deal right now. The premiums on those as gold has been rising has plummeted. There's multiple reasons for that. Part of it, I think, is just the skyrocketing price of gold means more investors are interested in bullion than numismatics, but also those who hold these pre-1933 coins, older investors maybe, as an older generation of investors, passes away, leaves their estates to their kids and such, those collections get liquidated, and there's probably a lot of these hitting the market as a result of that. Now, this is an MS65 coin. I never bought numismatics before this year, and this is the only one I own, but I did pick one up from SD Bullion earlier this year. I'm glad I did because the price of gold has risen significantly since then. But, I think like many things, the pendulum is going to swing on the premiums on these older pre-1933 gold coins. And I think that right now, the fact that the premiums has come down is an opportunity. I mean, you can get a generic gold bar. I think it's a little over 1% over spot, or you can get a slabbed graded pre-1933 coin that might be, this one's 100 years old from 1924 for a little over 3% over spot. I don't know. Seems like an opportunity. Let me know what you think in the comments down below. Nick's Coin says pre 1933 gold is hot right now. Yeah. Well, and it's actually not hot, which is kind of the thing, right? It's like investors are not as interested in that, but I like to buy things when others are not interested, and then when they become interested in them again, you sell them. The old buy low, sell high trick, right? So not a bad move. So anyway, again, not financial advice, but that's what I'd be looking at here. Now let's talk about gold and Bitcoin and the metals here, and because the trade thus far has been Bitcoin soaring, Bitcoin around $82,000 right now. So I think that's an increase of more than $10,000 since the election. Excuse me. Whereas the metals are plummeting, right? Now, I've mentioned in the past that I do own some Bitcoin. 84,000 comic lover says, wow, it's moving fast. Since the time I started this live stream, it's up significantly. Um, this has to do with the Trump mania again, the reaction to his election. Trump has told us that he's going to be the Bitcoin president. He's going to make the US the cryptocurrency of the world. One thing Greg Manarino says, I don't know if anybody likes Greg, probably some overlap in our audiences, but I like his stuff. And he says, that Trump's not going to make us the constitutional money capital of the world. No, it's going to make us the crypto capital of the world. And, Trump's got these NFTs of him being a superhero printed on cards and stuff. I mean, it's kind of goofy, kind of funny, whatever. We live in a clown world, folks. But that is part of what is driving the Bitcoin price. And, Bitcoin could go a lot higher from here. And I do own some. I think it's good to be diversified into it. Now, I don't know that the entire world's wealth, the market cap of the entire world is going to have to go into Bitcoin at some point. Is 21 million Bitcoin going to have to account for the entire wealth of the world? Is Bitcoin going to $1 million? Well, I don't know, probably not. But I suppose anything is possible these days. So, I think it's wise to hold some. But I'm not selling my metals. And again, I don't give anybody advice on this channel. It's just me sharing my thoughts and what I'm doing. But I'm not liquidating all of my metals and going into crypto. In fact, if I owned more Bitcoin, if it represented a bigger portion of my portfolio, I might even think about selling some and rolling it into the metals now, because Bitcoin's gone up, metals have gone down. It's a good time to make that trade, right? But I'm not doing that. Every now and then I buy some Bitcoin, I send it to my wallet, and I just, I never sell it. I just sit on it. And it's like, diversification is good. I mentioned in a recent video goldbacks. Now, don't worry, this isn't going to be a long spiel about goldbacks, but I mentioned these in a recent video about how you can go to upma.org and you can earn interest on your goldbacks and you can get free storage. And I got some pushback in the comments there, people saying, oh, I thought you said if you don't hold it, you don't own it, right? Why are you putting it in storage elsewhere? Well, look, I mean, diversification is important. Yeah, I hold physical metals in my own possession. Obviously, they're right here, right? These aren't cardboard. But diversification is important. You don't want to hold all your eggs in one basket. That's the reason I own some crypto. It's the reason I have some gold backs over at upma.org, because they offer free storage. If you're looking for other storage solutions, you can go to SD Bullion. They offer their SD Bullion depository program. And if you own a few coins, like if you've got a handful of 90% silver coins, you don't need to really worry about that. But if you're putting a lot of money into the metals, you might want to consider some storage. It's something to think about, just diversification. And that's why I mentioned that. So, no, I don't think I'm being hypocritical when I mention the gold-backed storage program and the fact that you can earn interest on gold. I mean, the fact that you can earn interest in gold anywhere is pretty remarkable, right? That's kind of the whole problem with gold, according to Warren Buffett, is that you pay to dig it out of the ground, you pay to refine it, and then you pay to stick it back in the ground, meaning a vault, right? So if you can earn interest on your gold anywhere, then I think that that's a huge benefit, right? But anyway, enough about that. So let's discuss the Bitcoin trade here. I think it's maybe getting a little overbought. And again, I mean, Bitcoin has shown us that it can be a tremendously volatile asset. Obviously, I mean, what was it? A little over a decade ago, it was under $1,000, and today it's over 80,000. But at the same time, we've seen swings up to over 60 and then back down to 4, right? Meaning over 60,000 and back down to 4,000. So I would be a little hesitant to buy into this Bitcoin mania. especially because I believe this is largely being driven by false perceptions about what a Trump presidency is going to look like. Now, again, I'm not saying it's bad that Trump has won. I think the previous administration, I mean, they're funding endless wars. They're obviously mismanaging the economy. So it's hard to imagine that Trump could do that, much worse. I think that the idea of ending wars, not sending weapons that are, being dropped on kids, that's what the current administration's been doing. So if you can avoid that and change that, I think it's a good thing. But the idea that he's going to come in here and miraculously fix the economy, I think is, well, I think it's maybe just a bit overly hopeful. And so the sell off in the metals here, as I pointed out from the charts earlier, I think it's getting close to a bottom. And, anything could happen, right? You could see the metals drop further. You could see silver go down to, I don't know, 25 bucks. I mean, I'd be buying with both hands personally if we see that occur. I just don't really envision it, though. So I think that we'll be getting very close to a good entry point here. And, pullbacks in the metals. If you're a stacker and you're still stacking, then this is not a bad thing, right? Seeing the price of gold and silver come down. If now I get it, if you're a retiree, if you're just sitting on a big pile of metals that you've been accumulating over the years, you're not buying more metal, you're hoping for maybe some kind of an exit soon. Yeah, I can understand why you could be frustrated. Now, again, I wouldn't personally sell here out of fear. I'm not selling any metal. In fact, I've never sold an ounce of physical metal. I'm holding it for the long term. I do think there'll be a payout there at some point, but who knows? Maybe there won't be. Again, you got to understand that you don't know what you don't know. But I think that the odds are here we're very close to a bottom in the price of gold and silver, and that once Trump gets into office, it's going to become clear that the debts and deficits are not going anywhere, and the debt is going to continue to explode. I mean, there is a precedent here that we can look at, right? Donald Trump has been president before for 4 years. And what happened when he was president? Well, the debt exploded. Now, I think Biden has probably added some more debt to the pile than Trump did, but this is splitting hairs, right? And also, people will say, well, yeah, Trump added a huge amount of debt to the national debt, but it was all because of COVID, right? It was the pandemic. Well, let's not forget that he signed his name to stimulus checks, right? I mean, he's not a small government guy. He's not a high interest rate, fix the economy kind of guy. He's a low interest rate, pump up asset bubbles, easy money kind of guy. That's just what he has been. And, I don't think that that's a good way to run the economy, but I'm not an economist, so what do I know? I just try to observe these things and prepare myself for what is ahead. It's not really a judgment. It's not anything but an observation of fact. And what we have observed previously is that Trump expanded the national debt tremendously. And I think a lot of the inflation that we've experienced over the past 4 years, gets blamed on Joe Biden and his administration. And sure, I mean, he didn't help things, but I think a lot of that was set in motion by what we saw under Trump. It takes a while for these things to move through the economy. And so I think that he, at least in some part, is responsible for the currency debasement that we have been witnessing. And I think there's going to be a lot more ahead. And also, on that topic of the pandemic, I mentioned people always say, well, Trump had no choice but to expand the debt and to oversee, huge debt monetization by the Federal Reserve. Well, who's to say that over the next 4 years, there's not going to be some kind of similar crisis? Do you think that we're done with crises? I mean, the world is on the verge of World War III. You've got major conflicts in the Middle East and Eastern Europe, and maybe he'll solve those problems. But again, I mean, I'm not holding my breath. Now, Ronan here says, don't be a Trump hater. You will lose a lot of followers quickly. Well, look, I'm not really hating on Trump, but I also don't tend to trust politicians too much. And I think that if you put your faith in any politicians to come riding in on a white horse and solve your problems, then you're going to be disappointed. So if you want to, not subscribe to the channel because I speak honestly and tell you how I see it, then, maybe this isn't the channel for you. But if you like hearing it straight and unfiltered, at least just how I see it. Again, I'm not some genius. I'm not making a case that, as Paul Harrell would say, that my opinions come from the mind of greatness or originate in the mind of greatness. I'm just telling you my thoughts. And, a lot of these things are just facts, right? That, yeah, Obama did 2x the debt, Jeff Nelson says. Sure. The last three presidents, Biden, Trump, and Obama, expanded the national debt more than all the presidents before them combined. Okay, and that's not an opinion, it's just a fact. That's just, look at the numbers. It's not like don't take it personally. This is just what has happened. And if you can't wrap your head around mathematical facts, then no, I did not just disgrace Paul Harrell. Watch this set. At least I hope I didn't. I'm a big fan of his, actually. I'm just pointing out that I don't really put myself up on some pedestal and say that I have all the answers here. I'm just trying to observe things and make the best judgment for what is coming next. And I view gold and silver falling on a Trump election as being an irrational reaction in the markets that provides an opportunity for stackers to acquire hard assets at cheaper prices ahead of massive currency debasement. Maybe I'm wrong. If you think that that's a possibility, do me a favor, smash the like button. We got 400 people on the live stream today, 75 likes. Let's get it over 100. I would really appreciate that. And I think that it's important to spread this information because you're going to get a lot of people right now. There's a lot of division in the country. And I think a lot of people are, jump on the bandwagon. They jump on a team, right? They think that as long as their team is in office, then everything's going to be fine. And unless you're electing a wizard to be president, they're limited in what they can do, right? It's not magic. Like, we already have $36 trillion in debt. And again, I'm very hopeful that, things will be good in under a Trump administration economically. But you know what they say, like, hope for the best and prepare for the worst. And the reality is, deficits expanded under Trump before, they expanded under Biden. They're probably going to expand again, especially because it's easy to cut taxes, right? Politicians like to deliver things that are popular. So we've been promised we're going to get a lot of tax cuts. I suspect taxes will be cut, and that's great. I don't like paying taxes. I view taxes largely as theft, with the threat of violence backing them up. So I think it's great that Trump wants to cut taxes. I mean, if he is able to replace the income tax with tariffs, I think that overall, that in an isolated vacuum is a good thing for the economy, right? You are at that point no longer penalizing people for being productive by taxing their labor, which, in and of itself should be beneficial for the inflation problem because you're encouraging people to produce more goods and services to expand the supply of goods and services. But the problem is that even if Trump really truly wanted to tackle government spending, and maybe he does, I mean, maybe he plans to cut government spending, it's going to be very difficult to get other politicians on board for cutting spending. Imagine cutting Social Security. Not a very popular thing. Any of you out there watching, I know my audience tends to skew a little bit older. There's probably a lot of people who watch this channel that collect Social Security. Would you vote for a politician who's going to cut your Social Security or going to cut your Medicare? Trump's certainly not going to cut defense spending. And those are three of the biggest items on the federal budget. So even if he manages to reduce some kind of discretionary spending out there, it's not going to solve the problem. And the bulk of spending is going to continue to grow. And Jay says tariffs are not a tax. Well, I mean, they kind of are. I mean, it's a tax on imports, right? And ultimately, that likely gets borne by the consumer. I'm not saying it's a bad thing. I think that taxing via tariffs is preferable to taxing income. I mean, it's how the country was run for more than 100 years, and the economy grew arguably a lot better during that period of time. So it's like I'm not arguing against the tariff policy, but replacing the income tax with tariffs, you need tariffs to be very high. And also, if you want to fund your government with tariffs, it would probably be a good idea to reduce spending at the same time because your income may diminish, right? And so we already have a huge discrepancy between government revenue, despite the fact that government revenue is like at a record all-time high. Spending has outpaced the growth of revenue tremendously. And if you cut taxes, which again is good, and you don't cut spending commensurate with your tax cuts, then the way that you finance that is with borrowing. Somebody posted a comment the other day that I thought was great. They said there's an old saying that Democrats like to tax and spend, and Republicans like to borrow and spend. And I really couldn't say it much better than that myself. And so, likely, the way that all of this spending is going to be financed is rather than through direct taxation, it's going to be financed via the hidden tax of inflation, right? Because ultimately, when you continue to expand the debt, what ends up happening is all of that debt has to be monetized by the Federal Reserve. Now, right now, think about this. Right now, the Federal Reserve has been engaging in a program of quantitative tightening for the past 2 years, meaning they are doing the reverse of debt monetization, at least ostensibly. I mean, they might have some hidden balance sheet somewhere that shows different, but the official balance sheet, if you look it up, has been shrinking since 2022, with the exception of the banking crisis of March 2023, when we saw the balance sheet expand briefly as they bailed out the banks. Now, what has happened to the gold and silver price during the past 2 years? It's gone up a lot. Gold has taken out record all-time highs. Silver, even with the pullback, is still up significantly year over year, like almost 40%. Now, what's going to happen when the Federal Reserve is forced by some crisis to return to a policy of quantitative easing, debt monetization, buying up debt? We know Trump is a low interest rate guy, right? That is not a secret. I mean, this is what he fought for during his term. He's said that he thinks that the president should have a say in Federal Reserve interest rate policy. If you are a big government kind of guy, you're going to want lower interest rates, right? So you can finance all of that spending via borrowing and reduce the interest cost. And that's one major government expense that Trump may actually be able to bring down, the interest cost on the debt. But how will he achieve that, right? It's by lowering interest rates. And how does the Federal Reserve lower interest rates? Well, it's not by cutting the federal funds rate. I mean, the Fed has already been cutting the federal funds rate. They've cut by 75 basis points since September. And what's happening to the interest rate, the yield on long-term U.S. Treasuries? They're rising. So the only way the government or the Federal Reserve can bring down interest rates in this kind of environment is by buying up the debt and reducing the yield on treasuries. Because you got to understand, bonds, they're subject to supply and demand. If everybody is selling bonds, if investors are selling bonds, you see the yield go up. And that means that if somebody comes in, buys up a bunch of the debt, well, it drives the yield down. Now, who's going to buy up a bunch of government debt? Are you going out there and buying bonds, even at 4 or 5%? I mean, it's very likely that inflation is going to outpace that yield. So who's going to do it? Well, who has done it historically? The Federal Reserve. And again, if you think that the next 4 years isn't going to have some kind of a crisis associated with it, I mean, I've got a bridge to sell you. And you also have to consider, I think it's at least worthy considering. I know there's a lot of euphoria right now surrounding the Trump election, the Trump administration, that maybe the reason he was put into office here, and maybe you believe the elections are real, maybe you don't, maybe the reason he was put into power here for the next 4 years is to take the fall for a major economic collapse. Now, that's not going to be good on a number of fronts. One, because it means that inflation is likely to explode because, deficit spending during a major economic downturn always rises as the government tries to stimulate the economy. Yeah, take the fall, SV Timber says. Exactly. I mean, it's possible that Trump has been set up here to take the fall. And I'm not, advocating that I hope for that. I think it should be a concern, though, especially because if we do see a economic decline under Trump, it may be something completely out of his control, right? It could be a collapse of a massively saturated debt market and a system with derivatives in the quadrillions of dollars. I mean, this may be something that Trump has no ability to forestall, and he may be set up as the fall guy. And can you imagine the rhetoric we're going to hear here about, if that does happen, if we get an economic crisis, about how this is all Trump's fault? I mean, it won't be, of course. It'll be the fault of all those presidents who have massively expanded the debt. It'll be the fault of the previous administration who has eviscerated the economy and left a huge mess for Trump to clean up. But the real problem is going to be who's going to get elected in 2028 if we have a major economic crisis under Trump. I mean, it could be somebody way to the left of Joe Biden and Kamala Harris. So, anyway, these are all things to consider here. And, anything's possible in this system. Clearly, as I mentioned earlier, I mean, we live in a clown world, folks. If you agree with that, smash the like button, because I think there's one thing we can all agree on here is that something's not right in this system. And, maybe the euphoria is all warranted. I hope it is. And look, if the euphoria is warranted and we get some great economic boom, it's not going to hurt you to have some hard assets in reserve just in case. But if we do get a major economic crisis, if we do get a return to quantitative easing from the Federal Reserve, which I think is highly likely, then gold and silver are going to be the insurance policy that you might need to cash in during that time. So anyway, leave me a comment down below to let me know what you think about the topics that we covered in today's video. Hopefully I didn't trigger anybody too much or lose too many subscribers. But anyway, thanks for watching, everybody. I will catch you next time. Stay safe and happy stacking. Smart Silver Stacker, out.